Well, it wasn't a wild card Friday, but we did have three stocks that went up over 100% today, which is not bad. So when I first sat down this morning and I pulled up the scans on my phone, I saw that leading the gap scanners were penny stocks, these low price stocks, which, I'm not tuned to trading them because for all of my years, I've never done particularly well on these low price stocks. It's not just my opinion that I don't do well. It's actually in the data. If we look at the price and the volume, you can see on stocks under $2, this accounts for less than 2% of my total profit, which is over 10 million. All right. So I don't make a lot of money on cheap stocks. When I saw once again that we had these low price stocks on the scan, I was like, oh boy. So first one today that was up over 100%, SPEC, SPEC. This one was kind of interesting because it actually started the move after hours and it was explosive. After hours, this thing goes from 35 cents right here at like 5 o'clock all the way up to 85 cents. It pulls back, goes sideways, breaks out at like 7 o'clock here, pulls back, and going into 7:30, 7:45, it's hitting the after hours high, and then we go into just a little bit of pullback for 8 p.m. So this thing actually broke over $1. This is pretty impressive. It's not every day that you see a stock make this kind of move at that time of day. So, all right, huge move after hours, and I am sure that there were people that were buying this, hoping for a gap up and a continuation up to 2 this morning. But what's interesting is that at 4 a.m., slammed down, high volume selling. And that's 600,000 shares there in the first just 2 minutes. So definitely traders are ready to sell SPEC. So let's pull this one up and get a little bit more detail on it. The float is 3 million shares. As you can see right there, when we look at the daily chart, you'll see that this is a stock that has a history of some nasty red days. I would actually this would be worthy of grabbing a screenshot because if you see this kind of price action, this is a stock that you just know, and I'm going to grab a screenshot of it right here. I'm going to go control. Let's see, there we go. You just know that this type of stock has a very high likelihood of failing. Once you sort of learn the behavior of some of these, you leave them alone because it's not worth it. All right, so I'm going to add that one there to my slide deck. I'll talk about that in my next class. So a terrible daily chart. All right, so that didn't help it. Go over to stock quote, scroll down, and you could see right here, I was trying to figure out what's the catalyst. So we had yesterday at 5:07 p.m., an 8K. So we had news that was filed that came out. And when I first pulled it up, I was just like a little bit confused about it because they entered into an agreement with, this is a law firm, Skadden? I've never heard of them. But anyways, it's a law firm, agreed to adjust and defer payment of legal fees incurred by the company in an amount of $6.2 million. Holy smokes. So agreed to reduce the fees to $2.7 million. Okay. And 2.37 is payable in cash. So it's like, I don't know. And then some of it's in the form of common shares in the company. I don't know. So I just sort of thought, that's kind of a funny headline. It just didn't feel super, strong to me. And I try not to be too biased when it comes to headlines because look, if the stock is moving up, ultimately I'm a technical trader. I'm going to trade the price action. But when I saw that headline, I was a little skeptical. So I think evidently other traders must have felt the same. So there was kind of like a lot of hype as it first starts popping up and people are like, whoa, this thing's going crazy. And then, market's closed, 4 a.m. we open and we're selling off, pops up, sells off more, pops up, sells off more, tries to kind of curl. And at 7 a.m., this is when people who are holding from after hours dump. They sell their shares at 7 a.m. and it just goes lower. So SPEC, it was up 100%, but didn't get any trades on it. Didn't end up holding up very well. Okay, next trade, AREB. AREB, this one I traded, and it's a low price stock as well. So American Rebel Holdings. On this one, we had a distribution agreement with the state of Connecticut. I don't know. I mean, All right, so that's our headline there. And it basically took off and went crazy. This speaks to the fact that there's so much exuberance on these lower price stocks right now. 30 cents, it goes straight to 80 cents. Basically the same as spec, right? Goes straight up here. It does pull back a little bit here, and then it comes back up, coming into the sort of during the opening range. I got in at 70 cents. So I took a position on this at 70 cents, right about here, squeezes up to 80, pulls back, goes up to 85, goes up to 90, pulls back, comes up to about $1, wasn't able to get over $1. Here's something interesting. Let's look at that 200 moving average. This is actually another one to grab a screenshot of because this ran into that 200 moving average almost to the penny. All right, so let's grab a screenshot of this guy here. So this is an example. It's not a bad daily chart, but we just know that we've got that 200 moving average level of resistance here. So I'm just going to paste this in here, 200 EMA. So 200 EMA resistance. All right, so what we know is that a lot of these stocks, if they're extended coming into that level, they run into it, they're not able to break. Now, I will say that KAVL last week was really impressive because it came up to the 200, expected resistance, and this thing blew through it. But that was actually kind of what made it so special. So it comes up to that 200 right there, it pulls back, it goes over it, and I don't think people were expecting that. And all of a sudden, we got that squeeze up to 8. Okay, today, actually, by the way, speaking of KAVL, you could see big gap down. So what was the deal? Why is the gap down? Secondary offering. So they priced the $6 million offering here at $1.53. So got the offering on KAVL. We thought that might happen because there was a shelf registration, I think amended or updated or filed last week. So that was KAVL, no trades on that one. So AREB was our second stock to hit 100% today. It's still sitting at up 160%. Then we had NXL. NXL, third stock to go up 100% today. This one, honestly, this one kind of came out of left field. I don't know what happened here. Look at this volume. Basically like nothing, and then 1 million shares, 3 million, 5 million. Look at how volume just came out of nowhere. Let's see. Let's just check and see if there's a catalyst there. So it went from $1.33 up to $2.80. Let's see. So yeah, let's see. So what time was that? I saw it out of the corner of my eye. It was about 11 a.m. I don't know what sent this. I don't know what this one was about. This isn't it. This is just a transaction. It's not even a very significant one. So, I'm not sure what this was about. It just started taking off and squeezed higher. It is a stock that's been in play a little bit this week. As you could see here, we had this day, I guess it was the end of last week, a couple of days sideways, popping back up and then pushing higher here. All right, so now my profit today, traded 2 stocks, locked up $1,662.84 of profit on MINM and the small trade on AREB. AREB, I took with small size and I sold it too soon, which is fine. I went red on it, came back up, and I got out. MINM was the one that I did the best on. But what's interesting today is after yesterday's kind of close call, I sort of today felt like maybe I shouldn't push my luck too much. MINM, to be honest, it surprised me. I would actually say, this is an example of not a great chart. If we grab a screenshot of this one, it's really not terrific. You've got this daily history of these nasty false breakouts, which you can clearly see. It doesn't hold those levels. Lots of big red candles, topping tails. So this morning, a couple of people mentioned it early. They said, oh, MINM, it must have been like right in here when it was popping up just a little bit to like, 340. They said, oh, take a look at this. And I took a look at it and I was like, I don't know, guys. You've got the 200 moving average on this crossing right at 387. So 200 moving average right here at 387. I don't know. It's got a 1.3 million share float, but I didn't see a clear catalyst for it. So I just sort of felt like, I'm not sure. I don't know if we're going to get anything on this. But then it's kind of crazy. All of a sudden it pops up and it goes from 350 right here. It rips up 350 all the way up to 375, 380 to 4. And when it did that, I said, you know what? I'm just going to take a starter. I bought 2,500 shares at 4. The thing goes to 480. I'm up 80 cents a share on 2,500 shares. I was like, holy smokes, let's just see what this does. Instantly, it drops back to 380. And then it pops back up, and I got out at about 420. So I made $500 on that first trade on 2,500 shares, and I just was like, wow, that was kind of wild. That was a big topping tail. I don't know. Sellers came in. Let's be careful with this. So then we see high volume selling. It comes back down. I'm sitting up $500 on the day. So, you know, I'm like, I don't know, not really sure. Towards the open, it curls back up right here. And let's see. So let me go back here. So the first trade was 396, added at 409 and 424, got out average at 417, I guess about that. Then I got back in, let's see. So this was back closer to 930. All right, so around 9:15, it breaks over volume weighted average price. And right here, I was like, I don't know. You've got the 200 moving average right around 387 on the daily. We just had this big pop. It didn't hold that level. I don't see the catalyst. Is this really going to work? So I said, I'm not going to touch it. Ends up going to 390. It pushes to 4. It drops down. Pops back up, drops back down. Pushes up, pushes higher, drops down. And right in here, there was a 20,000 share seller at 410. It was 410. It was right here. So we broke over it. We come back down, and I said, you know what? If we're going to hold over that level, I'm going to buy. So I got back in right there at 410. It squeezes up to 430, 440. I got out at 448, going right into the open. That was a nice trade. I was happy with that. So then we have a pullback. It does a little bit of chop. Look at these topping tail candles. Topping tails, topping tails, topping tails. Just that chop is ridiculous. But I did take another trade in here, getting in at about 450 for the squeeze through the high. And we hit a high of 480 before flushing down. And anyways, I just took a bunch of small base hits on this. I probably took, gosh, let's see. Well, I'll count them out. All right, so I've got one trade there. I've got 2, 3, 4, 5, 6, 7 trades. 7 trades on this. And yeah, 7 trades. And actually, I think they were all winners. I don't think I had a losing trade. I had some trades where I added a little high and I made profit on the trade in total, but I had an ad that was too high. But I think all 7 of those trades were winners, and then a small winner on AERB. So accuracy today was actually pretty solid. But here's the thing. I got to a point where I was like, you know what? Honestly, even right before this trade, I was up 900 on the day, and that was after 6 trades on it. So I was like, you know, my average winners right now are tiny. Like, I keep getting in this thing, and it goes up like 5 cents, and then there's a big seller, and it stalls out. And then it dips, and I buy a dip, and it pops up, and I'm up like a little bit, and then again. So after that happened, and I have 6 small wins, I said, you know, I better be really careful here, because if I get in this with too much size, I could lose all of that in one trade, and it's gone. And then, seriously, like a moment later, I see some green on the tape. I basically, to be honest, got sort of tricked from the level 2. There's this big burst of green, kind of like what you see here. And I was like, oh, here we go. I think we're going to snap through this level. I get in, and where was that? I can't remember. I mean, it was right here. It was because I sold when we had this candle that popped up. I was hoping for a squeeze to 5, but I can't remember if I might have gotten in on this candle here, and it dips down. And I was like, uh-oh. You know, I'm unrealized red here, 20 cents a share. And then it comes up, breaks through 70. I'm like, there you go. But it stalls out again. And I just got out, and I was like, you know what? You're done with this one. This is, it's only a matter of time before you catch a jackknife and you catch a big loss. So looks like there was a little bit of a rejection there. Anyways, you know, got a little profit today. Don't want to overstay my welcome too much. One thing that I'll say right now, I was just noticing this. So let's see. So right now it's, let's go back to, we'll do year to date. So year to date, we're coming towards the end of June. I'm sitting at $258,000 in profit so far on the year. Let's just take a look back at where I was at this same time last year, just for, year over year comparison. Just take a quick look. So year over year, last year at this time, I was at a very disappointing $126,000 for me. Disappointing for me. Look, grand scheme of things, this isn't bad. But look at this. The commissions, 36,000. This is net. 111 in a commission. 11,000. So I had fees and commissions of $47,000 as of right here last year. So, we'll go back to year to date here. Year to date right now, I'm at, it's similar. It's actually very similar. But you know what? The net profit is twice as big. So why is it twice as big? Let's just copy paste this. So it's twice as big because the average winners have to be higher. All right, that has to be the difference. So let's look. So average daily gain 1,200 last year, average daily gain 2,300 this year. Average 62% accuracy this year, last year 64%. So accuracy was a little higher last year. I was actually noticing that accuracy is a little low right now. Let's see, average, I'm gonna look at the average winners. Where is it? They rearranged this. Average winning trade 624 this year, average losing trade 613. Last year, 413, 500. So, you could just see how different 2 years can be. Now, I'm not going to compare 2021 or 2022 or 2020 because those were COVID years. So those are going to skew everything. But let's look at 2019 for a second. So 2019, I was at 270. All right. So I was a little further ahead than where I'm at now. ECN fees were a little less. Commissions were darn near the same. Average winners, 870. Average losers, 1,000, 1,100. Those are a little bigger. Accuracy, though, was 71%. So, it's just different ways to cut the pie or skin the cat. I don't know how you want to say. But 2018 was at 282, right? Average winners, 1,300. Average losers, 2,600. Or, 1,200. ECN fees were quite a bit lower in 2018. 2017, this will be interesting. 115, right? So 2017, that was lower. Let's see, 2016 here, 81,000. So, the cool thing here is you've got 16, 17, 18, 19, 20, 21, 22, 23, 24, 9 years of historical data. So I like being able to kind of look back and do these sort of gut checks. And so, what I'm seeing right here is that I am 50% ahead of or actually I'm double. I'm up 100%, I guess, year over year. So if we were gonna announce my Q2 earnings here, like I was a publicly traded company and a small cap, we would say, Ross is up, earnings 100% up year over year, right? These guys, they get so excited. Now, it's not a lot of money, but look, at the end of the day, it adds up every single day, showing up, every month showing up. This does add up. That's how, over the course of a decade, you accumulate up to $11 million. You just got to keep showing up every single day. And the fact is, you don't know when the market's going to go crazy. You don't know when there's going to be a dot-com bubble or there's going to be a pandemic or something insane will happen. So you keep showing up every single day. You keep learning. You try to keep improving. But the reality with trading is that not every year is going to be better than the last. That is a myth. To think that you're just going to sort of every year you're just going to make the same amount, that amount plus 10%, plus 10%. It's just not like that with trading. You're going to have some years where, the markets, you do this much this year, you do this much the next year, then you do this much, and then, this much, and then back to this much, and then, a couple small years, and then you can have a huge year. So this is what we signed up for, right? Now, if you can handle that, then trading is for you. If you want that consistency, that guaranteed income, well, day trading, it's not going to give it to you. So you just got to be willing to kind of go with the flow. And when it's hot, ride those waves of momentum, try to lean in, dig deep, get aggressive. But when it's cold, ease off the throttle, slow down, and do not overstay your welcome. So, something I've been talking about and thinking about is the role that commissions play in my trading. Last year, I was feeling really frustrated at the end of last year, because last year I spent so much money in fees and commissions. I just felt like, it was, so this was my net. So my gross, so I made $389,000. It's 400 grand that I made trading, but I had to give 63,000 of that to my broker for ECN routing fees and another 20 grand to them for fees and commissions. So, or just commissions. So, I mean, they basically made $80,000 just off of me, one person. Think about that for a second. I mean, 10 traders like me, and they're doing like almost $1 million a year in these fees that they're pulling in. They've got 100 traders. It feels like a lot. And it feels to me that's too big of a percentage. Historically, paying 10%, okay, so 10% would be 38,000. Paying 15%, all right, you're at 45,000. This is $80,000. Paying 80,000, that's like 22% of my profit, just like back of the napkin, but 22%. That's kind of dumb. This year to date, I'm at, let's see, so I'm at 309, but we've got 40, so we're at 50,000. So yeah, we're already at 15%. We're at 15% right now, a little above 15%. And if I can keep that in check, it won't get too much higher. But listen, I had some days just this week that were out of control. Right? We look at this day. So this was gross. So let's look at this day right here. This day right here, I had $1,015 in fees and commissions. It was a green day, but not after fees and commissions. We're at $858. Right? It's just kind of dumb. It's stupid. It's frustrating. So anyways, I'm gonna do some shopping around, and over the years in 2019, I tested different brokers, and I was still happy with the broker I was using. I tested free commission brokers. I used E-Trade, I used Ameritrade, and I think I used one other. I've used Interactive Brokers before. I've used Fidelity before, and I've kept coming back to being happy with the broker that I'm using. And one of the things that definitely is great about it is the platform is reliable and it's super fast. It's not glitchy. It's a solid platform. And, if I look back on everything I've made, and most of it's been with this broker or a broker that was comparable and I paid commissions on, I can't really, can't be too upset. I made some good money, but in total, I've paid $1.4 million in almost $1.5 million in fees and commissions over the last 10 years right here, or 8 years, whatever it is. So, that's 10%. Right, on 11 million, and this is 11 million net. So actually, it's a gross is 12.7 million, net is 11. So that's where big picture, it's been like it was fine, but it's the last year where it was really bad, and this year is still pretty bad, and I'm just starting to, at times get frustrated about it because it's preventing me from trading some of these low price stocks. That's one of the reasons I typically have avoided the penny stocks. The commissions are insane. So anyways, it's something that I'm thinking about. I know a lot of you guys use different brokers than I do just because they're easier to set up. It's a lot easier to set up an account with Robinhood or Thinkorswim or E-Trade or Webull or whatever than, these brokers that are kind of like more catering towards professional institutional traders. But yeah, I don't know. I just wonder if the competitive advantage that those brokers had years ago is kind of dwindling, that their value offering just isn't what it used to be. I mean, I think there's no denying it's not what it used to be since 2019. So I don't know. At some point this summer, since the market's, a little, I mean, it's not bad, but it's not crazy hot. Maybe I'll spend a couple weeks doing some research and checking out some different brokerage accounts and seeing if there's other platforms that, more or less give me what I'm looking for, but address the commission issue. So anyways, that's it for me. I hope you guys have enjoyed this recap. As always, hope you hit that thumbs up, subscribe to the channel. I'll remind you that my results are not typical. Trading is risky, so manage your risk, take it slow, and I'll see you back here bright and early for the next upload, which is actually going to be coming tomorrow. So make sure you stay tuned for that, and I'll see you guys real soon.